Due to the July the 4th celebrations, Tuesday was our first trading day of this week in the US markets, and it was not a good one for AMC, down by about 6% at the time of filming. We're going to be talking more about this pattern later. This video is not intended to look at that really at all, just quickly acknowledging what is going on. What we are here to focus on though is what's going on in the markets, and again how that ties back into AMC. Two great pieces, and I'm going to be explaining what they both mean. The first one's coming from the user whose name is listed here on Reddit, and it says, Forbes, stop Wall Street looting from teachers, firefighters and police. I thought it was the apes' fault, but I guess not. It's a good article, and that is exactly the title of it. Teachers, police and firefighters, pensions are being secretly looted by Wall Street. Now, everybody here knows what that means, and we know how that is happening. But it's very nice to see the narrative changing slowly and actually focusing on who is really to blame. Because this is my personal opinion, but I think when it does actually hit the fan, when the markets continue to crash, who knows? If it carries on like this, we could find ourselves in a situation like 2008, maybe even worse. And somebody is going to have to take the blame, and it's probably going to be Wall Street, because again, that is whose fault it is. Now, I think this time, with that clairvoyant view, we're seeing a lot of these major, article writing sites having the foresight to acknowledge who is in the wrong, because we will all know in the end. But to actually say it for once is a nice change. Now on to our second piece, which is this. It's coming from Twitter, and it's speaking about how the hedge funds are operating in the current market. So that's the @ of the individual there, and it says, short sellers pull back on their bets against the stock market. It says that the total US short selling increased by 20 billion in June. That's down though from 61 billion increases in May, less than most months in 2022. So you get a picture of how this one is working, right? We're seeing less and less shorting. And as the user points out, when we have a quick read about what it is, or less and less bets against the market, I should say in general, but as it says over here by the user, it's odd how short sellers are easing off their bets in the stock market now, at a time where the market is bearish, and so is the general economy. We're seeing stuff like hyperinflation and a looming recession, amongst other factors, and they should really be pouncing now. Because think about it, now is the time where it is going to look legit. I spoke about this in, I believe it was our last video, where I said now is a time where they should have saved that energy to short AMC, because if they wanted us to believe it, it could be a little bit better right now, because obviously at the current time, the market is declining. By pushing AMC down when the market was up, they didn't really have much room to run to the downside. But yeah, to summarize what I'm saying here is, we're seeing a perfect storm in the markets, and this could potentially be perfect for short sellers. If you are a short seller, a seasoned one who knows what they are doing, like these hedge funds supposedly are, now would be the time to start increasing bets to make more money. But we're not seeing that happen. And again, going back to the whole AMC and GameStop fiasco, is it because they know of the risks associated? Do they know how large they are? And is that why they are continuously decreasing the increases that we are seeing? That's just one theory of seeing it, but I just want to hear what you guys have to say in the comments. That's it for now though. Thank you for watching the video. I will all see you in a bit.